The House and the Senate are back in session this week. They've got 2 more weeks before the Independence Day recess, and there's a number of bills on the floor. They're continuing their trek through the appropriations bill, so this week we'll have the Transportation and Housing and Urban Development bill on the floor. They'll also consider the Intelligence Authorization Act, and there's a chance that the House will take action this week on the Senate-passed Trade Promotion Authority legislation. In the Senate, that body will continue its consideration of the Defense Authorization Bill. It's kind of a light week in terms of committee meetings. We're keeping an eye out for the House Appropriations Committee. Their subcommittee on financial services and general government is expected to mark up that appropriations bill at some point this week. It hasn't been noticed yet, but we're keeping an eye out for it. We're also paying close attention to a hearing on Thursday in the House Financial Services Committee, their subcommittee on financial institutions and consumer credit. This hearing is going to be on several legislative proposals aimed at reducing regulatory burden for credit unions and other financial institutions. It's the second tranche of reg relief bills, if you will, and so we're real excited for that hearing. Thursday's hearing in the House Financial Services Committee will give the members an opportunity to examine 12 pieces of legislation, including 6 that are really important to credit unions. The first is a bill by Representative Blaine Luetkemeyer of Missouri that would end Operation Choke Point. This is a program that the Department of Justice has been running, and it allegedly has been putting pressure on banks and credit unions to close certain types of accounts for consumers. We're supportive of Representative Luetkemeyer's bill. The second bill is a bill by Representative Andy Barr of Kentucky. This legislation would treat loans that a credit union holds in portfolio as qualified mortgages for the purposes of the CFPB's qualified mortgage rule. Very important piece of legislation. We have testified a number of times in support of the proposal, and we're strongly supportive of the legislation as it goes through committee. The third bill is a bill by Representative Lynn Westmoreland and Carolyn Maloney. This bill is our examination fairness bill, and among other things, it would set up an independent ombudsman at the Federal Financial Institution Examination Council and an independent appeals process, so that if credit unions have concerns or disputes with their NCUA examinations, they're not appealing those decisions up through the NCUA. It would go through this independent process. There is a fourth bill by Representative Randy Neugebauer, who is the chairman of the subcommittee. This bill would establish a commission at the Consumer Financial Protection Bureau, replacing the director with a 5-person commission that is nominated by the President and confirmed by the Senate. We've been supportive of this concept from the earliest days of the Bureau, very supportive of this legislation, and hopefully it will go through the process. The fifth bill has been introduced by Representative Steve Pierce from New Mexico and Brad Sherman from California. This legislation deals with the implementation of the CFPB's rule on TILA-RESPA integrated disclosure requirements. For a long time, folks in Washington, folks at credit unions have wanted a consolidated TILA-RESPA form. It's going to hopefully make the closing process much easier for financial institutions and for consumers alike. But the tough part is getting from where we are now to that integrated disclosure. Credit unions have to comply with the new rule on August 1st. The problem is that there's no transition period. So loans made in July have to be done one way, mortgages closed in August have to be done another way. What we've asked for is for a safe harbor during a reasonable transition period, maybe till the end of the year. The CFPB and NCUA, who will enforce this rule for most credit unions, have said that they'll be sensitive during a reasonable transition period. And that's fantastic. The problem is that the law carries with it a private right of action, and nothing the regulators can do at this point can extend that out. So we've asked Congress to give credit unions and small banks until the end of the year in terms of a safe harbor. So that's what the Pierce-Sherman bill does, and we're strongly supportive of that. In fact, over 300 members of Congress signed a letter that we supported to the CFPB urging them to take action. We just need Congress to take that final step. The last bill that we're interested in at this hearing is the NCUA Budget Transparency Act, which has been introduced by Representatives Mick Mulvaney and Kristen Sinema. And this legislation would require the National Credit Union Administration Board to hold an annual hearing on the agency's budget. We're supportive of this legislation because we think it would bring increased transparency and stakeholder input to the agency's budget process. After all, the agency's budget is funded in large part by credit union resources and credit union member resources.